Good morning and welcome to today's webinar, where we will be talking about Sage Intacct's newest, one of their newest tools, the Dynamic Allocation tool. We have a small group today, so let's try to answer questions as they arise. I'll try to be on the lookout, for them. I've got the chat box opened up so I can see that. Our goal today is to try to just give you an introduction into the Dynamic Allocations tool. I'm assuming that you're interested in seeing this because you're using more sophisticated allocations, creating them in worksheets, and probably importing them into Intacct. And it's a real headache to do that. Mistakes can be made, and so you're probably looking to this maybe as an opportunity to get away from that and to streamline things. So today, the big question is why dynamic allocations? What's so special about them? Well, first, they save a lot of time, managing allocations. I know in my experience, I had a few points in time where I had to create some rather sophisticated allocations, some simple ones, but they were all based on like the relationship of one expense group to another, or allocating overhead out of a management company into the different locations and departments within those locations based on a formula, like perhaps top line percentages would be used as the basis to allocate corporate overhead. And doing it in spreadsheets, I mean, you can do it and it works, but my experience with it was, and I'm sure you've had experience similar, is that it's time consuming. It's one more thing that you have to do to close the books, and mistakes can be made, and it's hard to audit. It's hard to audit. So with these dynamic allocations that you can create, you're going to be able to set account-based allocations, and then basically just generate them. All the dynamic aspects of it are within Intacct anyway. And so you're creating these allocations within Intacct and posting them, and you have really good visibility. So increasing the consistency and the accuracy. So every time a month rolls around and the books are ready to go and you're ready to allocate generate your allocation rule, it just runs in the background and it lets you know whether it passed or failed. There's all sorts of good information with it. We'll get into some of the details behind that. And then going backwards and trying to figure out how this allocation was created. If you ever had somebody leave the organization that was in charge of doing the allocations on Excel and they cut some corners, now you're trying to look at this Excel document and trying to figure out how they did it. It's just really frustrating. So I'm going to switch right now. There we go. So I'm going to use a demo company today that's set up for dynamic allocations. And I want to kind of go through this a little bit and show you a couple of things. Before we get started on it, I'd like to show you that there's always been an allocation method in Intacct. And before I get into dynamic allocations, I just want to show you that this is still a very valuable allocation. Dynamic allocations don't necessarily replace this. This really has its has a really good purpose. And if you're not using it, maybe it's because you're not aware of it. But this type of an allocation is used within a transaction, whether it's a journal entry line or an AP bill line. This allocation can be tagged on the line, and then whatever value is on that line, say there was $1,000 on an AP line that was going to an expense account, 30% of it would get allocated this way to department and location, 100 and 100, and then 200 and 100, et cetera, based on these percentages. So that's always been there. That's inherent in. It's a standard feature in Intacct right now. You don't pay extra for it. But the dynamic allocation, it's a subscription app, and so there is a fee for it. So as we're going through this demonstration today, I'm hoping that you'll get enough information, to see if there's, enough, juice from the squeeze relative to what you're going to be able to save in time and gain and improved accuracy and better auditing versus the cost. I'm not really quite sure exactly how much the cost is. I know it's an annual subscription, but if you're interested, we can definitely get that to you. Just kind of let us know if you're interested in that. So here we go. I'm going to just kind of walk you through some of the steps for the dynamic allocations. First of all, as I mentioned, it's a subscription service. So when you subscribe to it, you would just basically go into the company subscriptions, scroll down to dynamic allocations, click on and click configure, and that is it. I mean, there's nothing else to do. You don't have to go in and configure anything like you do some of the other modules. So that's really simple. Once that's done, there's a couple other housekeeping things that you have to do because all of the allocations will post into an allocation book that is housed within a journal. So you'll have to create the allocation book, and that's really simple. Just navigate to General Ledger, Setup tab, User-Defined Books, and you can just add one. I've already added it. I'll just show you what it looks like. So here's our allocation book. It's really streamlined. It's really simple. There's not a whole lot to it. You just basically put in a name allocations. This management reporting button, we would recommend that you don't select that one because it basically overrides a closed period. So you could actually post an allocation into a closed period. That's not recommended, but it's available should you want to do that. So after creating the allocation user-defined book, we have to have a special journal for it to post to. So again, navigating to General Ledger, Setup, user-defined. So this particular demo company, as you can see, has a pretty large number of user-defined journals. But here's our allocations journal, and again, this is really easy to set up. You just give it a name, and you're all set. And you can define which book is. It automatically will tell you which book is associated with it. So that's really easy to do. Okay, so subscribe to Dynamic Allocations, create an allocation book and a companion journal, and those are like the basic structural things that you need to do, and it's really simple. So the next piece I'm going to show you is how to actually create a rule, and I'm going to create a dynamic allocation, and I will go into one that's already created, and we'll step through it. I think it's pretty cool how they've got this set up. I wish they had it available when I was a user. So, one last thing before I jump into that, there's one other configuration thing I want to show you. I'm sorry for not mentioning that. So I want to jump into company, and so if you have like roles set up for your different users, I think this is the administrator role for this demo company that's being used. There is a subscription once you configure or subscribe and configure for dynamic allocations. You'll need to grant permissions to people who are going to be working within that module. So it's in General Ledger permissions, and scrolling down, there's a new generate allocation, account allocation definitions. So there's permissions for each of, for that, and for generate allocations, for recurring allocations, so you can set up a schedule, account allocation groups, so you can create groups of allocations, so you can run those all at one time instead of one by one. That's a really nice feature. We'll show you that. And view an allocation log. So after subscribing and configuring, you want to set permissions, and then create the user-defined book and journal. So good. All right, now let's dive into an actual allocation. So navigation is pretty simple. Again, it's within general ledger. It's in setup and allocation, account allocation definitions. So let's click on that. So we only have one setup, and this is a pretty easy or simple allocation that's here, but it's illustrative of what it can do, and it's a really good foundational starting point. For those of you that might have some more complex allocations, if you're interested, I would imagine it would be a good idea to schedule a demo, and maybe we could have a pre-demo call and identify what it is that you're trying to do, and perhaps we could demo how Intacct can actually do what you're doing right now in Excel. That's available. So just let us know if you just contact me or Christine if you'd like to set that up. All right. Well, not Christine, Kate, but contact me and I'll take care of it for you. Sorry about that. All right, so here's an allocation definition, and this is where you'd go like everything else in Intacct. It's a list view, so anything that's been created will show up here. But as I said, we only have one, but it does tell us, the ID. There's a description. It kind of gives us an idea of what it's for. This says to allocate allocation of fringe benefit expense, the journal, and then the last date that this allocation was posted, and a number of entries that that were posted. So you can take a look at, you can actually see the entry. I'm not going to do it right now because we'll be looking at this entry a few times. So here's the entry, or here's the allocation, and I'm going to edit it. So what I want to show you, I'm going to collapse these. So we'll just kind of go through these. All right. There are 5 areas within an allocation that you have to set up. So the rationale section of the allocation is very quite simple. Basically, this is where you would set up the ID, and then when you're initially setting it up, and then putting it in a description. And I know in a lot of the description field is required for sure, and then the methodology. So this is an area where anytime that there's boxes that are not required, oftentimes they remain empty. With this one, I would recommend putting something in here that kind of gives you a good idea of what it is that you're attempting to do below, so that as you go down, as you start going down through these different sections of the allocation definition, you're not straying away from this what you thought was your overarching methodology. So like this one here, it says we're going to allocate Department 300 fringe benefit expenses to all departments with salary expenses in USA operating, and so that's kind of our guideline there. You can attach any documents that you want. Let's say that you had maybe a schematic or some kind of a diagram, how this works, or maybe you have your current Excel based worksheet that you're using to create the journal entry that you're hoping to replace with this. It's probably a good idea to stick that in there as well. So the next section is dimension treatment. So I'm going to expand that, and there are a number of things that this is really quite simple, but we have a couple of things here. We have all the dimensions that are open for your company. And if you have user-defined dimensions, those will show up as well. So they are all here. And with this, basically, these switches, you can preserve values, or it can be an allocation focus. So I want to describe what each of those will do. So an allocation focus, it's dimensions that are set. So when you set these dimensions to allocation focus, these are the dimensions that you want to allocate or reclassify based on the calculation method that you'll select down in the basis section. So and then the preserve values, these dimensions set to preserve values will keep their original value. So if you have like a location 110, 120, 130, and there's transactions that will create, there'll be allocation transactions that would post for those. It would preserve those, those location values in that allocation entry, and I'll show you what that looks like. When you select not considered, if there's a value in the line that you're allocating for any of these, and you say not considered, that value is not going to post into that dimension on the allocation transaction line. And there's a really nice explanation here that allows you to see what each of these do. But really, what you're doing here is you're basically saying, okay, I want to bring this, this dimension department is going to be the allocation focus, and then I want to preserve the location. So basically, you're going to have department and you're going to have location as the dimensions that show up on the allocation entry line once the allocation is generated. Okay, and we'll see that. You'll see what I mean. Okay, I'm going to collapse that for now. And the next one is the source pool. So the source pool essentially it just defines where Intacct will dynamically find the amounts to use for your allocation. So this is basically, what am I going to allocate? Think of it that way. And it's very functional. You can, it's account group driven. So in our example, remember we said we're going to allocate the benefits expense, and we're going to allocate 100% of it. So we just select the benefit expense group, and if you don't have one created, like most areas in Intacct where you have the drop-down list for an account group, you can add one. So in this exercise, in this allocation, we are allocating the benefit expense. That's required, and then we can determine how much of it we're going to allocate. You can allocate all of it. You might want to only allocate 90% of it, but regardless, you can whatever it is you want to allocate, you just stick it in there. The books that you can use, the different books that you have available. In this case, they're using the reporting book as accrual. They've added the allocations book, and then they're going to use amounts from any amounts that are in the main reporting book, which is the accrual, plus any amounts that might be in the allocation book. They're going to use those amounts to allocate. So benefits expenses then will be everything that's in this account group. Going to be 100% of it's going to be allocated, and it's going to be 100% of benefits expenses that are in these two books. We're qualifying it by current month. You can select any of the other reporting periods that are available in Intacct. I'm not really too familiar what this true up does. I think it'll calculate, like if there's a like a penny difference or something, it handles it a little bit differently. I'm just going to skip over that one. The next area within the source pool that we want to do, so we've selected our account group. How much are we going to allocate? Which books are we going to do, and then we're going to use the amounts from the period. And now, what are the dimension filters? So do we want to, filter the benefits expense even a little bit further? So yes, in this case, we're going to take all of the benefits expenses within the U.S. operating location group, and then within that location group, we're going to limit it to the benefits expenses that are in that group that are assigned to or tagged with the admin department, the 300 admin department. So, and we're not doing any other dimensions, but they're all available. So you can be pretty, you can become very specific as far as limiting the account group source to specific combinations of dimensions. So that's nice. So now the next step is the basis. So think of the basis as the basis is used to identify the method used to allocate the source. So how are we going to allocate it? Like, what are we going to use, to allocate it? So in this case, they're using something that they feel is strongly, correlated with benefit expenses. They're going to allocate it using salaries. So there's an account group called salaries, and it's so you kind of go through here to set this thing up the same way that you do. You just toggle through and you click on the things that you want to use in the basis definition. But this is interesting here. There's two allocation methods. There's dynamic relative account financial, which is what we're using in this example. Or if you have like statistics, let's say that you want to allocate rent to each department based on square footage, and you have square footage set up as a stat account in your general ledger. So you have those stats entered. You would use a dynamic relative account statistical, and then you would use your square footage, account group. So that's nice. Like, I can see there's a lot of value in being able to have that, being able to use the stats accounts that you might have uploaded into your GL. So with this one, it's gonna be dynamic relative account financial, and again, it's called dynamic relative because every month the values within the salaries will change, as will the values within the source pool. We can use activity or for accumulation method or the ending balance. Now, I understand this to be, if you were using, let's say that you're bringing in man hours and you wanted to use man hours as your allocation basis, but in January, you're bringing in January's man hours, and then in February, it's the cumulative man hours, year to date through February, March, and so forth. So if you want, so if you're tracking information that way, then you could use the ending balance for that account. Elsewise, it's just going to use the activity for the period that you specify. So it's just good to tuck away and know. I can't think of a whole lot of uses for that off the top of my head. So then here again, we have the books. So we're going to use the accrual book, the allocations, and this should be set to main reporting book and alternate book. So it's going to pull everything that's in there and allocate it, just as we saw with up here with the source pool. Again, the time period. You could use a different basis time period if you wanted to. If you wanted to, you could allocate current month benefits using current year-to-date salaries, I suppose. But in this case, we're just going to use the current month salaries to allocate current month benefits. Sometimes you might have an account that's in you might have something in your account groups that cause it that there could be a negative value in there, and it could screw up or skew the allocation. And I've encountered this in my career too, where I'm trying to allocate something, and for some reason, a value that I'm using as part of the basis has a negative value, and I don't want to use that in the allocation. I don't want to take something away, so you could just click on drop negative basis lines from consideration, and that particular value would not be included in the allocation. So that's just nice to tuck away as well. Again, down here for the basis, like we saw with the source, you can select the different dimensions. And in this case, we're just basically saying we want salary expenses. In the basis, we want salary expenses for the current month. The activity for the current month for all U.S. operating locations, and that part is done. So we're done with that part. Then the next piece is the target. But now, after we calculate it, where do we want the entry to go? So that's what target is. So we are going to put it in the allocations book. The Allocations Journal, that's where the transaction is going to reside. So if you want to view transactions, that's where you'll find it. And this is the account. We want it to go into the employee benefits account, but it's going to be in this book, but it will be in this account. if you're doing overhead and you have like maybe let's say you're just aggregating all of your management company's overhead expenses. So there's no delineation between salaries versus occupancy and so forth. You're just going to do one big fell swoop and just allocate the whole thing. And you could create a line, a general ledger account called overhead allocation, management company overhead allocation, and that's where you would post it. So this is pretty straightforward. This dimension overrides here. So let's say that up above in the dimension treatment, where we had a dimension that we did not want to preserve values on, and we did not want to be an allocation focus, but down here we can override and we could put a dimension in, let's say project. And let's say that we have, for projects, we always want our entries to have a project in them. But for this entry, it's not going to be assigned to a specific project, but we're going to assign it to, let's say that we have a no project dimension. So you could select that one. And this is done at, I think when you're running reports, so that everything that if you have reports that are filtered, like columns are filtered by dimensions, and you put something in here that doesn't have that dimension in it, it's not going to pick that up. So if the 6125 line doesn't have this project dimension, and you have a report that's qualified or filtered by project dimension, you'd want to put like a no project, dimension, in that. So that's where this override comes in. I hope I explained that well. That's how I understand it. I've not used it, but I think that's how it's supposed to work. And for reversing, you just always check use the source account. You want to reverse it the same way that you created it, the same fashion that you created it. All right. So I'm going to cancel it because I don't think I need to change anything. All right. So that's been created. So again, just to recap, we've created I just basically walked you through how this fringe benefits allocation was created. We identified the dimension treatment for dimensions that were going to be the focus of the allocation, and then dimensions for which we wanted to preserve their values when the allocation was created. We discussed the source pool, and then within the source pool, we talked about how to use filters and count groups and so forth. And then we talked about the basis and the target. And now let's look at how we actually go about creating or generating the allocation. So to do that, we're going to go to General Ledger again, but we're going to leave the setup page and go to the all page. And there's under account allocations, there's a generate allocation. So this is really simple. You put in your GL posting date. So let's say, I think the last one was 8/31/17. Unfortunately, there's no data in this company for September of 17. But let's say that there was, and I wanted to run it for the next month. I would just put in the date, the posting date, the as of date. They give you the, usually this is going to be the same as your posting date, but Intacct is giving you the flexibility to change the as of date. I'm not really sure. I think you can't come up with any examples of why you would want to do that. And then you are going to discern here decide between generating an allocation for an individual allocation or for a group. And if you had a group set out there, it would be listed. For your individual allocations, we know we only have the one. We would pick that, and it pops it in down here, and it gives you kind of the information, a little scorecard of what has happened before, was last posted on this date, so you can make sure you got the right date. And then you click generate. Now, Intacct does this offline because depending upon how complicated the allocation might be, it's better just to run it. It's better to run it offline, and then Intacct will notify you that has been completed. So I'm going to skip, running it. And we'll go into the next step would be to go to the allocation log. So again, under General Ledger, all count allocations, view allocation log. I'll leave that, and we can see that we have the logs for the one that was created, quite some time ago. Since this is a demo company, you can view it. And so now we're actually looking at the allocation, entry itself, and we'll explore this a little bit more. So you can see it there. You can see it in other places too. Let's see. All right. So this one, failed because there's no data, and the description says there's no basis. So since there was no data, there's no basis, and it couldn't run the allocation. So I'm just going to delete that one. All right. So now we know how to create, generally speaking, create an allocation, a dynamic allocation. I walked you through how to generate it. It's pretty easy. I want to show you one other thing that you can do to generate. You can create a recurring allocation, and I've not done this, but let's add one just so you can see. So you just give this recurring allocation a name. And it could be where you're running, you call it monthly management company, allocations, or monthly fringe benefit allocations, or whatever you want it to be. And then like other areas in Intacct where you can do recurring entries, you set up a schedule. So when do you want your first allocation to generate? How long, like how long do you want it to run, for a number of occurrences, you can end date it. And you can repeat it by period. So you can do it you can repeat it daily, weeks, months, years. So if it's an annual one, you just pick years. If it's monthly, you'd pick months, etc. Your email address where you want the notifications to be sent. And then this is where you just basically, tee up what you're going to put in there. So with this one, we put the fringe benefits in, and we would basically say, okay, well, let's start with September of 17 and run it through, that just never ends. We'll just keep it going, and we'll run it by month. Every 1 month, and save it. And then based on the schedule, it'll just run it. So that's really handy too. You don't have to worry about it. So you don't have to worry about forgetting to do it and being in a pinch and then having to generate it, and then your financials are held up while it's generating. It'll already be there for you. So that's pretty nice. So far so good. I mean, it's pretty compact. I'm sure that as we go through this, you're thinking about some applications for how you might be able to use this. But basically, let's just remember that it's really simple. It's doing all of the work that would be done in a worksheet similar to this. So I'm going to pull this over. First, let me do this. Okay, so this is how you would have to do it before. So you have to go into General Ledger, and okay, I'm going to do the August 31st, 17. I'm going to look at the account group. How much do I have in fringe benefits? So it's the benefits expense category group, excuse me. I think it was department 300 is what we said we wanted. And we wanted it to be location US operating, I believe. So we'd have to, how much money do I have and how much do we have an expense there for that, for the period? Put that in right. Okay. Okay. So here's the amount, that we'd want to allocate. And so let's say that I have this like spreadsheet that is set up, then I'd have to type that into the spreadsheet. The next thing I'd have to do is get the, so that's the source. Now I'd have to like determine what the basis is. So I'm going to flip this over to salaries. And I'm going to get rid of the department because we want it all. So let's get rid of that. And view. So now I have, so this is the source. And again, I would have to drop that, into my, allocation worksheet. So this is done every month, so for as many times as you have this. So there's like probably a cost benefit point in here where based on the cost of however much this module costs, you have to weigh, is it worth, how long does it take to do this, every month? And if you had like 15 or 20 of these types of entries, I think it's going to be a more compelling case to want to do this within the dynamic allocation application. But if you only have this one, I was a controller, I'm thinking I could live with this. But you just, so you're calculating, the percentage of the, how much is going to get allocated. Then you do this allocation. This is what's going to go in, and then you've got your journal entry import file that you cut and paste this into, or if you're sophisticated, you already have it as maybe as a tab on here, and you have like a formula that pulls it in. Then you go into general ledger, or not general ledger, but go into company and import the data and import it, and then resolve any errors, and all of that. So that's that process that I just went through. That's just kind of just a quick example of what's going to be eliminated. Plus, errors are going to be easier to resolve when they occur within an application rule rather than when they are created outside on an external calculation in Excel. Something could have gotten sideways. You might have pasted the departments into the locations or vice versa. You might have forgotten to put something in, the account number incorrectly, and then now you've got to go back and resolve the error. So it eliminates all of that kind of frustration. So that's my my quick sales job on that. When I think I had about 12, probably close to a dozen spreadsheet-based allocations that would have been really good candidates to migrate over to this. So I would have been really interested in looking at this a little bit further. So now that we've got the allocation done, we kind of looked at that. Let's take a look at how we can report on it. Let me move over here. Let's see where this is set up. Okay. So in reporting, I have a report that's I'm going to use as an example already favorited, and I'm going to put it in edit mode first, so we can just take a look at it. No, let's first view it. Let's view it first. So for that, oops, this way. Okay. And this report has like two sections. So there's this section here, and then there's this section here. This is before allocations. Oh, it even says it right here. Okay, good. Before allocations, and then after allocations. And we have two account groups. We have benefits and we have salaries. And we've got them expanded so you can see that these are just basically one account groups. So in the before, we have $160,058 that we need to allocate for fringe benefits. But you can see in the before, there's nothing in these departments. It all resides over here in admin. Then we've got, this is our source, and this is the basis. So the salary to the total for each one of these departments is going to be used to allocate this to these departments. So that's the before. So now the after that we can see we still have the same. We didn't do anything. The salary expenses are the same, but now the $160,000 that was in admin has been reduced to $20,000 because admin still keeps part of it because they had salary expenses. And the rest of it's being allocated. It is all being allocated based on the dynamic relationship of each department's salary expense to the total salary expense for that entity. So that's pretty nice. I hope you can all see that pretty well and how handy that is. And I want to show you, I'm going to go in here and click edit. And you're all pretty familiar with how these reports work. So with this report here, on the before column, this demo company must post up into Elder Book 606. But for the allocations column, we're bringing in the same accrual book, but we're also bringing in the allocation book. So it's bringing in everything that was put into the allocation book from the when that allocation was generated. So when you create when you're doing allocations with dynamic allocations, you want to set up reports so that you can actually have a set of reports that refer to that include the allocation book, because that's where those transactions reside. So I'm going to hit cancel there. So let's drill down on this allocation amount here and take a look at the entry. So here's the allocation entry. Here's the account. This is the target account. This was the source, and you can see that the source is in the general ledger. It's still in the general ledger. We didn't like reclassify it. We didn't zero it out of the general ledger. It's still there in company 110, 120 in the admin department. But what we did is we debited based on the dynamic calculation from the basis. We debited each of these employee benefits accounts for each of these pairings of location and department. And then over here, the offset to it is going into, it's basically this transaction up above, but instead of posting it to the general journal, it's going into the adjustments journal, or the allocation journal, excuse me. And so the transaction remains 160, the balance remains 160,000, but we're looking at how it's handled between the general ledger and the allocation journal. So I'm going to click on one of these entries that's posting to the allocation journal. And so here's the here's the entry itself. So we're seeing that everything is within the allocation journal. We're seeing that we've got a debit of 160,000 and a credit of 160,000, and this is kind of a smaller version of the transaction that we just saw, the main transaction. So this is nice. Then now this here I want to spend some time on. So when you're drilling into these entries, you can get like a snapshot of the allocation. And this is kind of cool. Click on that. Gives us some information about it. This is the fringe benefits allocation ID as of 8/31. It was initiated by me. It was created on 12/14/2018. It's got the green check mark, which means that that was successful, obviously. Now we have like a snapshot of our rationale that we can see, and then the dimension treatment. So we're basically saying that the allocation focus is the department. We're preserving the values of the location. We saw that in the entry. We saw both department and location in there. But if any of those transactions had any of these other dimensions, we did not see those, because when we clicked on that journal entry, it didn't have those any values for any of these dimensions. Then for the source pool, it's reminding us that we're using benefit expense. So it's got all of the things that we set up in the definition, and it tells us how we're filtering it along dimensions. And this also gives us a nice look at the source pool calculation. So we can click on that. It's going to drop down an Excel worksheet screen. I'll drag it over. So here's our source. So we had those two transactions that were in companies or locations 110 and 120 in the admin department. So that's what got allocated. We'll close that. Get down to the basis. We can see the basis allocation. Again, it's going to pull up an Excel work. You can see that. And finally, on the target, this is going to show us how what the result was of the allocation, the basis and the source. So here we go. So we can't export this one, but this basically shows us how each of the how the fringe benefits expenses were allocated based on these percentages that are a function of the basis, and the source. So that's a very nice, tidy little demonstration, I think, of how you can benefit from using the dynamic allocation, within Intacct. Now, I want to speak about something that I did not show you that we're all really excited about. So I believe that this module was made available in release 4 of 2018. And from that point until release 3 of 2020, which is coming up next week, dynamic allocations was limited to intra-entity. You could not do inter-entity, which really, diminished its value, I think, across the board to anybody, because most of our clients are multi-entity, and they would want to allocate. Most of the allocations that are dynamic based are going to span different entities. So it's really exciting to know that that's been resolved. I've not had a chance to test it. I'd love to be able to test it because what I showed you today was basically just an intra-entity, but the promise is there that it's available in this release next week, and we will be able to use it for inter-entity transactions, for allocation transactions. So that's really, really nice. And I imagine that most of you would, if you're interested in something like this, need it to create inter-entity allocations. So that's really nice to know. Well, that's all that I was prepared to discuss with you today. I'm seeing that there are no questions. However, if you do have any questions that come up after the presentation, after the webinar concludes, feel free to reach out to me. My email is mfox, that's F-O-X, mfox @MainerSolutions.com. I wonder if I have a slide with that on there. Hang on. Right here, you can see it on the screen at the bottom right-hand corner. mfox @MainerSolutions.com. Don't hesitate to reach out to me if you'd like to schedule a demo of this with maybe where we model or try to model a current allocation that you're using, demonstrate that it can work. Be glad to do that for you. In the meantime, I hope you guys have a great rest of your day, and thanks again for attending and allowing me to share this with you.